Welcome dear viewers to this new video in which we present to you an important topic in the world of real estate. Before starting, please subscribe to the channel and watch the entire video. Thank you.
Mortgage is one of the most common debts that people resort to in order to mortgage a real estate or fixed asset to the mortgagee in exchange for a specific amount of money and to agree on a specific interest rate and a specific repayment period. During this relationship, the ownership of the entire property is transferred to the mortgagee without having the right to sell it or legally dispose of it as long as the payment period has not come and the mortgagor has not defaulted on payment. Definition of mortgage. The mortgage, from a legal standpoint, ends in the event that the mortgagor pays the principal and interest within the specified period in agreement with the mortgagee creditor. This mortgage is characterized by a long repayment period and a low interest rate. The jurists agreed on the mortgage to permit it in Sharia, unlike betting, which is forbidden in Sharia if it represents harm to others or is suspected of usury. In the event of the death of one of the parties to the mortgage, the legal relationship does not end, but is transferred to the successor. In the event that the mortgagor pays the debt to the mortgagee creditor on the agreed date, the ownership of the property will revert to him, and vice versa. If the debt is due and he is unable to pay the principal, the mortgagee creditor has the right to carry out all direct legal actions on the property because its ownership has reverted to him. In the event that the value of the property increases at the time of sale, this increase is legally the right of the mortgagee debtor.